We got some massive news for HIMS and HERS stock investors as the stock price crashed over 30% today after there was news about the relationship with Novo Nordisk and its ability to sell the weight loss drug Wegovy. So I'm going to talk about the details of that announcement, what it could mean for HIMS and HERS stock investors, and whether or not this is a buying opportunity or this is a time to sell HIMS and HERS stock. Let's get into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so HIMS and HERS stock crashed around 30% in early trading on Monday after Novo Nordisk announced it was ending a collaboration to make its weight loss drug Wegovy available for the telehealth platform. Novo Nordisk said that HIMS and HERS was breaking the law by continuing to sell copycat drugs, which is the ingredient inside Wegovy, alongside Novo's branded drugs. And HIMS and HERS has been selling other options, other weight loss options other than the Wegovy and the offering from Eli Lilly. So this isn't something new, but it looks like Novo Nordisk was not happy with how it was selling that and how it continued selling that even after announcing the partnership with Novo Nordisk. They went on to say that HIMS and HERS has failed to adhere to the law which prohibits mass sales of compounded drugs under the false guise of personalization, Novo said in a statement. HIMS and HERS declined to respond to Yahoo Finance, but CEO Andrew Durham posted on X several hours later claiming that Novo's commercial team was pressuring it to steer patients towards Wegovy away from other products. And so this seems to be a disagreement between the two companies, and unfortunately the relationship is ended, and HIMS and HERS stock is now down over 34% on the back of this news. Of course, HIMS and HERS has been experiencing a burst in revenue as a result of the growing demand of these weight loss drugs. It's not just the offering from Novo Nordisk, but all offerings related to these GLP-1s or these weight loss drugs that also help with diabetes treatments have created a surge in demand for HIMS and HERS. So this news will definitely be bad news for HIMS and HERS. It will definitely cause a decrease in the expected revenue delivered this year and beyond, unless that relationship is repaired and they return to offering the products available for sale. But even without Novo Nordisk, HIMS and HERS will generate strong revenue growth. In fact, the management team noted that in their most recent quarter, revenue increased by over 30% when excluding all weight loss drugs. So not just the offering from Novo Nordisk, but all weight loss treatments included. If you include all of that and you take it out, the revenue would have still grown by over 30%. So they're growing revenue in other segments, like low testosterone treatment and treatment for menopause and other treatments as well. The company has over 2 million subscribers, and those subscribers are spending more on the platform as they mature on the platform and find various treatments that serve their needs. I've been bullish on this company, and the news today that the price is down by over 30% is unfortunate because I had the stock rated as a buy. I've had the stock rated as a buy almost all year long here in 2025. It's been a very volatile stock, putting investors on a roller coaster ride up and down with plenty of volatility. But despite those volatile stock prices, the company itself has consistently delivered excellent revenue growth, excellent profit growth, and excellent expansions in their returns on invested capital. In fact, the company boasts one of the best ROICs of any company I'm following at an ROIC above 40%. That's very impressive, especially for a younger company that's still in the early growth stages. They've been very disciplined in their marketing spend, targeting a return on marketing spend of less than 1 year, a payback period of less than 1 year. And even despite that, they've been able to grow revenue. In 2022, management provided investors an outlook of where they believe they can reach in terms of revenue and profitability, and they reached those targets 1 year ahead of plan. And then now, more recently, they provided investors an outlook of where they believe they can reach by 2030. And that outlook, investors can be reasonably confident that the company can reach because they delivered on their previous outlook 1 year ahead of schedule, right? So I often tell investors, when you're evaluating a management team, you've got to take into consideration their ability to perform on the goals they set out to investors. Some management teams promise investors big things, but fail to deliver, or promise investors things that they deliver maybe 6 years behind schedule, right? Tesla is famous for doing that. And so you've got to you've got to adjust downward their estimates that they provide you. But with a company like HIMS and Hers, it's a newer company, but already they've delivered on their forecast ahead of schedule. So now they're saying by 2030, they expect to generate at least 6.5 billion in revenue and 1.3 billion in adjusted EBITDA. And given their history that they've delivered on their forecast a year ahead of schedule, you can be reasonably confident that they can hit this target, even with the loss of this partnership with Novo Nordisk. So now, with the decline in stock price, Hims and Hers shares are trading at a forward price to earnings of 53, which I think is a relatively cheap valuation for a company that's growing revenue, profits, cash flow, and return on investor capital as quickly as Hims and Hers is growing, addressing a total market opportunity that's massive in the trillions of dollars and in a market that's ripe for innovation. The healthcare industry, especially in the United States and most likely worldwide, is underserving customers. Customers are unanimously unhappy with the treatments in healthcare and the cost of healthcare and the overall healthcare industry. And when an industry is like this, where consumers are unsatisfied and not happy with the industry, that's an opportunity for innovation. That's an opportunity for a company like Hims and Hers to step in and capitalize because consumers are open to something new. Because what they have right now is so poor that they're willing to try other categories. And the bar is set very low because the existing treatments, the existing service is so poor. And so I like Hims and Hers prospects. And I do see this as a buying opportunity for long-term investors. This is a volatile stock, and you're going to likely see these kinds of volatile price movements. So this stock is only for investors that are willing to tolerate higher risk. This is not for investors with a low risk tolerance. But if you've got a long-term horizon and you've got a high risk tolerance, I think Hims and Hers is an excellent growth stock for long-term investors to buy, especially on this dip here. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.